Thursday, October 30th. It's a big day for me. It's my Super Bowl because it's Apple earnings day. And if you go over to youtube.com and then at Trendspider, you will see an upcoming, an upcoming live with this one. I'll be there. I don't know why they didn't put me. They put Andy Jassy and Tim Cook up there, but I think I'm the most important guest. I will be live today at 4 p.m. On their channels, and I'm going to try and link it up to my channels. So if you're interested, go over there. We're going to talk about the Fed. We are going to talk about all the earnings, Microsoft, Meta, blah, blah, blah. We will talk about the China deal. We will also talk about OpenAI. It's kind of leaking that they may have an IPO. We'll talk about market caps because FYI, NVIDIA hit a big one and it was quick. We will talk about Alpha Picks. I put out a paid newsletter last night. I'll go over everything this morning, everything that's in there. And I will give you a strategy that Alpha Picks just implemented with our RCL, Royal Caribbean. I'll tell you all about it. And again, we'll end with the earnings stuff. But let's just go over for the first thing. The Powell speech yesterday, Fed. Powell, he shook the markets with talk about December rate cut not being an automatic thing. The committee had differing opinions. He said, and he made the point, there's not a 100% chance of a cut. Well, the market had rate cut priced in. And the market kind of pulled back a little bit. And I wanted to see, I was looking in Seeking Alpha for the article on it. And I just went into their AI. I mean, I have AI as part of Pro. I understand it is not part of the premium, but I have AI as part of the Pro. It comes with other perks. But the AI portion of this, Jerome Powell, I just asked it Powell's speech yesterday. It gave me all the statements that he made. It also told me about the bond market, the rate expectations, equities. Stock markets initially declined but recovered with the S&P ultimately ending mixed. And cryptocurrency, significant volatility with 817 million in leveraged futures being liquidated. And again, it links to all of these articles. Key economic content, employment concerns, inflation persistent, data limitations, tariffs, and then it gave me articles on the balance sheet decision, expert analysis. Again, yields soar as traders dump bonds. I can go down this rabbit hole. I literally went down the rabbit hole. I like this. Again, I was talking about the 10-year. The 10-year climbed over 4%. Federal Reserve cuts by 25 basis point, moves to NQT. That's a big issue. You should know about that. Reaction roundup. Here's the Seeking Alpha analysts. So, Leo Nielsen today was a great example of uncertainty. Initially, the market sold off as the Fed hadn't made a formal commitment to more cuts. However, once the market realized they weren't going to commit to that anyways, buyers returned. Again, if you're looking at the market that closely, I would argue you're probably trading futures or something of that certain. Because if you have diamond hands, again, right there, diamond hands, that's my coffee mug. If you have diamond hands, you're not looking at the market in that sense. I don't think this is as big a deal as the market makes it out to be. Again, the rate cuts, they were priced in. So yesterday's rate cut, priced in. December's rate cut, priced in. The reaction was based on the rate cut being pulled out. But the market doesn't need rate cuts. The market doesn't need it. So if it comes, it's a benefit. So as you start to see, well, maybe the rate cuts are needed. Remember, we're not getting government data. And here's your crypto traders see $817 million in liquidation as Powell cautions against rate cut bets. Again, if you are liquidated, you have too much risk. That's all that means. And then what did we get? We got another known. You knew this was coming. Trump signed a deal with China. It's priced into the market. What wasn't priced into the market? That they didn't talk about Blackwell. That's what pushed NVIDIA up almost 3% yesterday. They didn't talk about Blackwell, is what they said. But the China deal, what it does do is remove uncertainty about that in the market. So it's almost like a floor. You know, if you ever watch that game show with Rob Lowe on Fox about the floor, if they yank out the floor and people fall under, that's the market going down. As long as you have that floor underneath you, you're okay. So from a chart perspective, again, these yellow lines that I put in there, they're for me. And so I would probably move this yellow line probably up to about 610 on the Qs. Maybe it's, 606. You can see a nice little volume shelf right there. Where are we trading right now? 631. So if we pulled back to that 612, 606, somewhere in that neighborhood, then I would be looking at a buying opportunity. Again, I think you're in a buy the dip market. We don't have a lot of uncertainty, and we talked about it yesterday. Well, I talked about it yesterday. Not we. I say we in the sense of, the community. But again, I think the market is looking for certainty, and I think it's looking to move up. What's going to take it down? Nobody knows. But the reality of these monthly candles on QQQ tell me we are in a bull market until you're not. This month, just this month in QQQ, you're up 6.46%. And you've got 2 more days to go. So again, removing uncertainty from the market, that's what this does. Doesn't mean we have a deal and it's done. Just remove some uncertainty. Now, I went in, let's talk about the earnings yesterday because there were a couple of them. Google killed it. Google in pre-market was up as much as 10%. It's up 7.6%. They killed it. Meta, they killed it. There was a one-time charge. And the market still hates that they're spending so much. Zuckerberg is spending a ton. Microsoft had a one-time charge, and they're seeing a dip. Again, for Meta, I think anything under 700 is a great long-term buy. For Microsoft, if you get down near that 520 to 510 mark, I think that's a good buying opportunity. Is it perfect? No. Could we see it further go down? Yes. Google Cloud revenue went up more than anything. Search revenue was up. Again, removing risk from the market. That's what Google showed. It showed the market, hey, we can still make good search revenue. And Meta, the $16 billion one-time charge over $100 billion in CapEx spending next year. Again, overall, these earnings were a good sign. They are making enough profit to continue spending, and demand is higher than supply for AI. That is clear. We don't have enough supply of AI. That's what's clear. And so as long as these guys continue to spend and they continue to earn the money that they're earning, then you should be okay. There's never a guarantee. And I also wanted to find an article about the OpenAI IPO. So I went into Seeking Alpha and I just typed in OpenAI IPO, thinking it would lead me to an article. It didn't. It gave me a bunch of articles about OpenAI's pledge to remain in California, helps clear the path for potential IPO report. Yeah, that's yesterday. And then the corporate structure from 2 days ago. And it gave me articles. But the biggest thing was it told me OpenAI is considering filing with the security regulators as soon as second half 2026. Now, here's the thing. OpenAI very well might be a $1 trillion IPO. That would be record breaking. A $1 trillion. Remember, it was just a few years ago that Apple became the first $1 trillion company. It quickly went to $2 trillion. We'll talk about these market caps in 1 second, but I want to focus on OpenAI because I had mentioned yesterday with the corporate structure that they did, Microsoft now owns 27% of OpenAI. That $1 trillion market cap in an IPO would boost Microsoft considerably. Again, if it comes out at 1 trillion. If you want to invest in the OpenAI IPO, Invest in Microsoft. They own 27% of it. And market caps continue to break records. Okay? NVIDIA became the first $5 trillion market cap company right there yesterday. First company to do it. FYI. It took 80 days to go from 4 trillion to 5 trillion. That is crazy. That's how bullish this market is. It only took 80 days. Just to give you an idea, Apple and Microsoft, they just passed 4 trillion. It took them far longer to get from 3 trillion to 4 trillion. NVIDIA, people are spending on. And Wall Street still has a 10% upside target, 8%, $223. So is it worth buying it? Again, we saw in the earnings, they are spending. We saw in NVIDIA day, NVIDIA is partnering with everybody. So NVIDIA is trying, and Jim Cramer, I listened to the Compound episode with Jim Cramer, and he said it really well. He said Jensen Huang is running scared. So the difference between Cisco and Intel and all of those guys that had leaders, Jensen is a founder, and Jensen doesn't want to give up his lead. And he is constantly just worried about giving up that lead. So while I own AMD, and I've been clear I own AMD as well, I still own a large portion of NVIDIA. And by the way, AMD is only 428, I say only, but it's $428 billion. It's not even $1 trillion company. So let's go over the AlphaPix stuff. Because AlphaPix sent out a newsletter last night, and they basically said, hey, there were two things in this newsletter. The first thing is Royal Caribbean, okay? It has been a hold. If we go and look at Royal Caribbean right now, it's been a hold in the quant for 180 days. That normally would take Royal Caribbean completely out of the AlphaPix portfolio, okay? But here's the caveat to this. It's one of their quote unquote winner circle. That means it's actually given back more than 100% in just over a year. But because it's 180 days, you're supposed to take it out of the portfolio. Their decision, and this isn't this is part of their systemic approach. It takes the initial portion that you put in and you take that out. So say you put $100 into Royal Caribbean a year ago. Today, it's probably worth $200 and some dollars. That's the key. You take out the $100. You don't sell the position. That's the way they are managing it. Me, I am up like 38, 40%. And I looked at it just before just last night. As I was doing the AlphaPix, I am up 30 or 40%. I'm not up 100%. Okay. It has been a hold. They go over the valuation is a bit stretched. So for me, I've got to look at that. I don't have 100% gain, but I might start to trim it. I will start to trim it as its holding percentage. So I want to hold just what they have in the portfolio. That's all I want. And they also address in this article LRN. Okay, Stride shares plunged 44% on tech rollout issues leading to lower enrollment, but strong earnings and demand suggest the sell-off could be a buying opportunity. Again, they address that. This is what's great about AlphaPix, is AlphaPix gives you everything that you need to manage the portfolio effectively. And last night, I went and did, I looked at my portfolio. I was shocked because my top 5 positions in this portfolio are not the holding percentage of AlphaPix portfolio. Okay. My 5 are different. So I was shocked. So I did a video about it and I show you my top 5 positions. So go in there and you can look at it. It is a paid newsletter. So it goes down to a certain point. And then you have to pay, or you can get a free 7-day trial if you'd like. But I was shocked seeing my larger bets on positions recently have swung my top 5 positions to be different from the portfolio. But with that, I've grown the portfolio over 50% in just 1 year, whereas Alpha Picks is up 44% in 1 year. By the way, the S&P like up 20 something. So I am outperforming the Alpha Picks and the S&P. One of my top 5 holdings that's in the portfolio, it's up 8% in pre-market. Okay. That particular holding, I'm sorry, it's up 10%. It's 8% of my personal portfolio, but in the Alpha Picks portfolio, this particular pick that is up 10% in this portfolio, it is 8% of my portfolio. It's a strong buy in the quant. It's a hack around earnings. Okay? And I went through yesterday. I went into Trendspider, and you'll see I have an Alpha Picks watch list. I went in to Alpha Picks and I said, okay, what are the strong buys in Alpha Picks? And then I went into the charts and I found the earnings. See these yellow lines, this Royal Caribbean right here, that yellow line, that just means an earnings. Earnings are coming up. And I found 5 companies that are strong buys that report next week. So I created a watch list. And I'm going to see how they perform over the next few days. And if we go in with a nice little dip with these companies, I may start to take positions because we've seen it in the past. You saw ARQT I brought up yesterday, which was a huge winner. Again, earnings. Let's go over earnings because, you can talk about trimming, you can talk about that. Google, they killed it. 91 billion to 93 billion. They killed it. They're up 8% in pre-market. They just killed it. This is a stock that if you had the 4-hour algorithm, you'd be in at 247. You're trading at 295 right now. It's a good stock. The 4-hour algorithm on Trendspider, again, if you want Trendspider, this is the last day of the sale. And so when you see a stock like this, that is, I talked to a friend yesterday. He's like, I just slept on Google. Just slept on Google. This goes back to 2022 with the bottom. And I just put a trend line in there. And as it got to that trend line in June, I said, I want to buy this one. I sold some back here in April, bought it back in June. It was on that trend line and we started to break out. You can see the Bollinger Bands. Would I buy it here? Hell no, I wouldn't buy it here. Why? Even though they just reported earnings, you're seeing this one pop. Wall Street, their price target, 286. That's still a 4% upside. But FYI, it's not going to be an upside when we open up because you're trading at 296. Let it die down. But this, it's a hold in the quant. And why is it a hold in the quant? Well, you can go into analyze with AI and it tells you everything. The valuation is stretched. The price to sales is 9. Significantly above the sector, reflecting very expensive stock. Again, this is AI. It was just reported a few days ago. We will see what it says now because their growth is phenomenal. 13%. This is a huge company, one of the Mag 7. They grew 13% revenue growth year over year. YouTube revenue was up. Go and read. And if you don't read, load the annual report into AI. Have it summarized for you. And say, I'm a 12-year-old. Can you summarize this annual report for me? Look at previous annual reports and just go ahead and do that. Microsoft, they reported, outlines full year 2026. Expenditure acceleration as AI demand drives 80% AI capacity boost. They are killing it. Again, made more money, their growth. Stock is down in pre-market 2%. It was down as much as like 4 or 5%. The valuation stretched. Its growth, 14% revenue growth year over year. Why is it a C minus? We'll go and analyze with AI. Remember, these are just grades. So there are reasons for those grades. But when you go and look at the growth, shows robust growth with year over year revenue over twice the sector. This indicates successful expansion and strong financial performance. It doesn't tell you why it's a C minus, but you can go and look. Free cash flow. Excuse me. Return on equity is D. So maybe those are things that the quant factors highly. Profitability, look at that. Gross profit margin, 68 freaking percent. This is a great company. I own a bunch of this. Again, a $4 trillion company. Wall Street, their average price target is 621. You are trading at 526. I will tell you, when you go over and you look at this chart and you say, ooh, 4-hour algorithm got me in here. I'm sorry, we're going to Microsoft, not Meta. My 4-hour algorithm got me in here at 521. We're trading at 527. I think a year from now, that will look like a bargain. As you're closer to this 200-day, again, a good company, the 200-day on the daily, which is what is going to drive a lot of people, it's down at 461. Where's the 50-day? 513. Look at the last few times you've had it at this 50-day. It's just trading sideways. It's a good company. And then you had Meta. Meta got killed. Okay, it's down 10%. Earnings and revenue beat, but there was a one-time income tax charge. That's what seems to be what the market is focusing on. They are guiding a little light because they expect Reality Labs, which I don't even know. I have that in my notes because I loaded in the AI. This is a buy under $700. It is a buy under $700. It's right now 671. Let's go look at the chart. Okay, 4-hour algorithm had you buy on Meta at 718. 671, it's where it's trading right now. This is a buy the dip. Guess where this gap goes down to? 596. If you get down to $616, buy the dip. Why? Wall Street says Meta is worth $858. And I don't see them coming down from that because Meta just prints cash. Profitability, 81% profit margin. Growth, 19% revenue growth year over year. And its valuation, you're trading 26 times forward earnings. Yes, it's expensive. Yes, they are spending a bunch. But I like those metrics versus 6 months ago. And where was it trading 6 months ago? Let's see, what's the October? So we would go back to like April. 6 months ago, it was down here at 521. I loaded into this. So what you have to do is you have to take these nuggets, excuse me, of all of the companies that are reporting, and you have to put them into a thesis. And you have to say, okay, what are the stocks that I want to buy if I don't want to buy those? What are the smaller cap stocks that I may want to buy? Well, Daniel Newman puts it out here. When I hear capacity constrained and increasing CapEx from Microsoft, Google, and Meta, I feel good about IREN, CIFR, and Wolf, and Bitfarm, BITF. So again, you put those together and you say, well, maybe these are great buys. They are risky. So make no mistake about it. IREN, which has been a great buy for me at like $17 and is now trading at $57. It was at $60 yesterday where it closed. It is stretched. But if it's long term, again, I like to buy this one when the 4-hour algorithm tells me. Did I buy at 63? No. I just have this $49 point right there. And I say, okay, as we get down to that point, I want to start buying and adding to it. CIFR, I have a strategy for this one. I'm not going to tell you what it is, but boy, there's a yellow line right there. So again, take the nuggets from all of these earnings, try and come up with companies because they are spending a ton of CapEx. Where are they putting it? NVIDIA, Celestica, Credo. Credo is the number one semiconductor of Amazon. So again, figure things out like this, and you can try and find your best portfolio. My best portfolio, AlphaPix is beating out me. So I just add to those winners. I take what they do and I add to those winners. And what I do is I sometimes find other stocks, and that's why I suggest the bundle, Premium and AlphaPix. And then I load it all into Trendspider. It's a simple formula, rinse and repeat. And that's how I beat markets. That's how I do it. Now, am I beating the market? Full disclosure, am I beating the market this year? No. But I know why. 50% of my portfolio is Apple. So before you go and ask me, why should I listen to you? You shouldn't. 50% of my portfolio is in Apple. Year to date, this is up 7%. We can look at it. Over 1 year, it's underperforming the S&P. Over 3 years, it's just underperforming the S&P. Over 5 years, it's beating the S&P. Over 10 years, it's blowing the S&P away. And I have held this for 20 years. So if you look at this one, okay, going all the way back, if we just go back to when I put my first buy in back down here, you can see it was around 2004, 2005. Apple was beating it. The S&P, it was beating the S&P, and then it just grew, and that expanded. That's why I own it. Am I looking at year to date on this one? No, but my portfolio is doing perfectly fine. Now, again, I will be live tonight because we have earnings from Amazon, which is expected to report $1.57 per share. They actually reported last time $1.68 per share. Their estimate last time was $1.33. How does this chart look? Well, you can even go up and add Sidekick. How'd they report on earnings last time? You can go and use AI for that. I like looking at my charts. Where did we go last time? We tanked. It tanked from 230 down to 212. Where are you entering in this market? At about 230. Do we get the pump up? I don't know. Higher expectations. Maybe it pumps down. Apple, this is 50% of my portfolio. $1.75 earnings per share. What'd they report last time? $1.57. That's a big jump for a stock that is significantly up into earnings. Last time, their earnings, $207 was the price of the stock. Don't you wish you bought at $207 the last time they had earnings? Well, this time, maybe they tank. Maybe they come back down below that 260. It's an expensive stock. Go and look at the quant says, oh, it's a hold. It's been a hold for a long time. Why? Valuation and growth. Wall Street has a $256 price target on it. It's trading at $271. I'd probably be smart selling the damn thing right now. But what are they going to put in as far as their forecast? That's what's going to be. When are they getting Apple Intelligence in here? So I'll be talking about all that with Trendspider. If you have any questions, everything's on Linktree. Remember, today is the last day to get the pre-Black Friday Halloween sale from Trendspider. You can get 52 trainings per year with this. It is an unbelievable deal. And if that's not in your budget, take advantage of the 42% off on premium because you get so much more. And they are giving you the basic portion of Sidekick free for a month. Free. That's a $50 value on top of these savings. Sign up for an annual plan. Get my 4-hour algorithm. Get all of the things. We were just on YouTube Live talking with some of the folks that have signed up. They're like, yeah, best thing I ever did. And signing up through me, you get a leg up because you get my 4-hour algorithm. You get the custom watch list. You get all of the custom strategies that I have and scanners. So if you have any questions, again, everything is on Linktree. Go and check it out. I will talk to you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.